Ladies and gentlemen, welcome to the Sofi Weekly. On my right, I have Tokyo Tevis. Below me is
That's your left.
Sorry?
That's your left.
Your left.
Whatever.
My left? Oh, sorry. To my left?
Never eat soggy waffles.
Not that way. It's to the right side of my screen.
But you're talking about your left, not the screen's left.
Okay. To stage
We're off to a great start, everybody.
Stage right, Tevis. Below me is data-driven investing, and then on my diagonal portion here is Matt Farley, or the great and powerful Matt Money. Now, someone is late, okay? There is a missing member of this audience. He's doing his absolute hardest to try to be on time, but just not making it. Ladies and gentlemen.
Light mode.
How's it going, Roy?
Good. Yeah. I honestly, the reason why I'm late is I was playing with the Robinhood Legend platform, and it's really cool. And I was like leaving a lot of feedback and stuff.
Humble brag.
Honestly, it really was. Like it's the first time that I've actually had time to really sit down and play with it, and it's cool. So, sup, guys? Yeah, it's good.
Congrats on getting it, man. That's awesome.
Well,
so
Matt,
I've been
Everyone
off grid most of the week. Can I get access to Robinhood Legend, or is it just special people like you?
just special people or fast clickers.
Yeah.
So that's actually a good question. Like, is it going to be like Webull, where even if I don't have a Webull account, for example, I can still get access to all the trackers, or do I need an account?
You need a Robinhood account so far. Need a Robinhood account. Everyone that was at the thing, aside from Tanner, got the access to Robinhood Legends, but I don't have an account, so I didn't. I got to play with it while I was there, but and then the first 1,000 people, which I think the majority of that 1,000 was literally in Amit's chat, because he found the link on their website before they announced it. So people were signing up before they even announced that it was the first 1,000.
But they are planning to roll this out more quickly than Robinhood Gold cards. So
yeah,
hopefully by the end of the year. I don't know like timetables, but in the next few months, as things are working well and people are excited, those will roll out. Like it's really cool. Like I found like 5 or 6 things that nothing's buggy, but there's like 5 or 6 things I'm like, hey, these would be really good ads, and I'm sure other people will notice that too. So they seem very motivated to get these things out. But it's sweet. Like you guys all saw a preview and everything, but it's awesome. Yeah, just the feel of it, like actually putting your mitts on it. So yeah.
Now we will talk mainly about SoFi today. This was an amazing week. Maybe we'll leave some of that for the after hours or something along these lines.
Yeah.
But Tevis, by the way, there was 100% of people that were there agreed that the name of this podcast should change to FinTech Fridays. They were not happy that it was called SoFi Weekly.
It's a biased audience. I'm sure if you went to a SoFi conference, if they ever had one, they'd say keep it SoFi related.
I'll share one other thing. There was a strong anti-Canadian sentiment there. Not really, but like there were people throwing Canadian jabs at Tanner like all the time.
Sounds like America.
It was great. It was fantastic. That was probably like my third favorite thing there was the anti-Canadian sentiment. It's just like, yes.
I was like, oh, I'm Canadian. And everyone, like, even whenever I was at the airport, like outside of the Robinhood thing, people were like, oh, sorry to hear that. Like, they were...
we don't feel your pain, but we can commiserate with you.
Yeah. But an amazing week, so much so that we're joined here by 2 special guests, Chris, Matt. Let's talk about some SoFi stock. We closed above $10 a share. How does this make you feel?
It's awesome. I'm in the light.
Yeah. Chris?
He's finally seen the light. I'm excited. A lot of investing is about momentum, even though like I try to stay on fundamentals, but the truth of the matter is that like momentum does drive a lot of price action over the short term. And it finally seems like SoFi's turned a corner as far as that goes. So, I mean, it's positive, right? And again, it's nice to see, because I'm so heavily in SoFi, it's nice to see my portfolio up year to date, because so far, despite other stocks doing well, SoFi drags it down, right? So,
well, Hims is definitely a good counterbalance there as well. So
Yeah,
you're doing all right. Tevis, what about you?
What was the question? Oh, so if I $10, yeah, it's great, man. I love that it actually was able to sustain the $10 level, because it seems like it's finally, and not like knock on wood, but it's finally seeming like it's able to form a base up there. And that's absolutely necessary if we want to have a next leg up at some point or another. I mean, my whole thing was that, okay, if it can sustain the $10 range or roughly around that area by the time it goes into earnings, and we have a real chance of breaking that 52-week high if the earnings are fantastic, and if there's sustained momentum there. But like retail is selling into the price up, which makes sense. So there's going to be downwards pressure because of the short interest as well. But yeah, I really liked where we closed. I thought we were going to close closer towards the 9s. I even put out a poll around it, and we didn't. We closed above the $10 range, so that's a really good sign.
Yeah,
small steps.
Matt, you're probably the newest SoFi investor amongst this group, but what does breaking through the $10 mark mean? Are you selling out? Are you buying more? Where's your conviction?
I'm selling it all. No, I feel very fortunate because I didn't have to go through the suffering like you guys did, right? You guys really went through the trenches, and I know what that's like on other stocks, and it's not fun, and it feels like you're lost, and you're curious as to if this is even the right thing that I should be doing. So I'm glad that you guys are starting to see some momentum and really turning the corner, especially as we head towards a fourth quarter of profitability. I am excited. I don't know if I really explained this. So I give Tevis a lot of crap just because it's so fun to do, but he made me buy in March, and I'm glad he made me did. So I think I bought like a 2,300 share position. So it was around 20 grand. So it wasn't a negligible size position. But I would say that this actually ends up being now in the top 5 position for me as I've added over the past few months. So I think it's still not a very large position, but it's grown. So I think I'm up to like 40, not 40,000, 4,050 shares or something like that. So it actually ends up being, $40-some thousand position plus, which, considering I've consolidated a lot of other positions, and most of my money is in Palantir, Rocket Lab, Google, Amazon, this ends up being number 5 in terms of stock. Now, of course, it gets knocked out if you include Bitcoin, but just excited. I feel like kind of like a cheater, right? I've been able to look and follow along with your guys' journey and hearing the conviction and be able to get some of the headline numbers. And I'm kind of here showing up for the tail end when it starts to truly get fourth quarter profitability. And who knows, within the next 4 to 5 quarters, it might pull what Palantir just did in September, which is join the S&P 500. Because you guys are north of $7-8 billion market cap at this point, and that's the minimum you need to really get into the S&P 500. So excited to be along for the tail end. And as you kind of alluded to there, Tanner, there's some things that are consolidating in the portfolio for me, or potentially will be consolidating. And I think a great opportunity to put more money into SoFi here, especially as we travel into 25 and 2026 as well.
Do you think that this is going to break through a 6-figure position for you?
Ooh, you're asking tough questions. I don't know if I have that much. I mean, it's 40,000 now. I could see it doubling here in the next few years. So if I added a little bit more, I wouldn't be surprised if within the next few years, if it ends up being a 6-figure position. But
what about next year?
What's that?
What about next year?
It might be. I mean, it depends. I was just telling the guys behind stage. One, I thought it was Tevis's OnlyFans, which is the only reason why I clicked the link. Tanner sent this to me, and I was getting my credit card out, ready to feverishly buy whatever the monthly cost would have been. But then I unfortunately had to put my credit card away. But
you know what's
funny?
I mean, that's not a joke. I had to say that this was the OnlyFans link, and that's
it's 100% what happened. And then my thought process is I have some NVIDIA stock that I've luckily been writing covered calls on, so my cost basis is actually pretty good. But they're in the money now, so I wouldn't be surprised if they get called away, and that's okay because I've made some good returns on that. But I wouldn't be surprised if I put a portion of that money into SoFi. And so if it does double, I wouldn't be surprised it gets to the 6-figure mark.
So there was quite the amount of news today, or not today, but throughout the week and last week, we saw analyst upgrades, mainly just based because the stock is actually moving, but some things that, because Chris is here, I wanted a little bit more of an understanding of some of the things that happened last week that I was not 100% sure on. One of them being the Nova Credit expansion. Nova Credit, for people that don't know, is a partnership that SoFi has with this company that potentially helps them get a little bit more understanding on the amount of money that they make, maybe potentially through deposits or less standardized income streams, and seeing more of their outflows, they can get a better understanding of their actual net income. So with this partnership, this has been around since 2020. What is new here, Chris, with this?
I honestly, so I don't know on this one. So this is something that I haven't done any sort of deep dives on. I mean, it makes sense with what they've said, is that they've always said they underwrite to cash flow, right? And this is basically, that's what Nova does, is that it allows you to analyze people's cash flows and be able to underwrite more to that. So they've got a minimum of 680 FICO. But after that, the key data point for them in whether or not they approve a loan or not seems to be, well, they've said it's cash flow. But I don't have any sort of, I don't have a lot of knowledge of it. I don't know if anybody else here on the panel does.
I'm guessing expansion is, maybe it was a volume-based contract, and that they're seeing a lot more volume coming in, and as a result, they are expanding that. I don't think it's just extension. I think it was ongoing. So, and if that's true, that's really, really good for us SoFi shareholders. It also makes sense with, it seems like, Noda's remarks on what they're willing to do with the lending platform as macro continues to be clarified, as rate cuts fall. That's my opinion anyway. Not sure for.
This is one interesting part that just caught my eye, but is this little sentence here. SoFi, which has used Nova Credit services since 2020, intends to implement Cash Atlas to its loan underwriting to assess credit risk, improve credit eligibility, and enhance its members' experience. So for what I understand, I was looking at Cash Atlas being one of the products that Nova Credit has. It looks like what SoFi has already been doing. I don't know if this is just an enhanced version of this, or if this is what they've had previously under an unnamed product. I'm not quite sure. Tevis, any thoughts on this?
Yeah, I mean, it's an extension of an existing partnership. If they can improve their underwriting models by just even fractionally, it's just, these little shifts that will really help the business over time. I remember having invested in Tesla for quite a while, in the production line, whenever asked, Elon would say hey, we can't find, a couple dollars here or there, but we can find a couple cents here and there. And when you do that at scale, then you really get to some cost savings. And that's how I see these deals, right? They're the small things that, while they might not be the sexiest thing as a standalone, when you put them all together over the course of a year, they can really add up to some numbers trickling to the bottom line. So generally good, directionally speaking. In itself, is the deal earth-shattering? I think the Fortress one is much more significant, but still directionally great.
Yeah, we covered most of this Fortress deal last week, but Chris, do you have anything to add on the Fortress deal?
How did you cover it last week when it published on Monday?
He means on Wednesday on the Bootleg Weekly.
Oh, okay.
Sorry.
Yeah, the Fortress deal is a big deal for a number of reasons. I think number one, it just shows that there's demand for their paper, right? There's demand for their loans to be sold. It means more low capital revenue and income, which is a big deal. You also it does mean that they've got to find those loans, but I don't think they're hurting for borrowers, right? They've got a ton of members. Oh no. Tiger Roy came back out. Anyway,
Tiger King Roy, man, it's so funny.
It's so funny. Anyway, But it really is a big deal that they got another basically $2 billion forward flow agreement. They've already had one in their pocket. We don't know all the terms on it yet. We don't know how, over what time period, or what the gain on sale margin is. But directionally, the important thing is that like all of these, it just seems, as rates come down and as the forward curve comes down, it means that the loans that they're writing are slightly less risky because people tend to not default when rates are a little bit lower. And then also just that like that as rates come down, treasuries become a worse option for people who hold assets, right? So for capital managers. And so they want to invest their dollars into something that's going to give them a higher return. And so that from their perspective, personal loans and other things become more attractive because they get a higher return on those rather than putting it into treasuries or something. And so it's just an opportunity cost issue. And so as rates come down, we should see more of these types of deals. And the truth is that like a lot of the people who are a lot of the analysts who are kind of sour on SoFi talk about how like LC is going to, Lending Club, is going to get, because of their marketplace, all of a sudden their capital light income and revenue streams are going to go up. And the only, like, Lending Club hasn't seen a deal like this, whereas SoFi has, right? And SoFi has, I think where SoFi has a competitive advantage, where this actually stems from, is the fact that SoFi is consistently building its member base, right? So like in 2021 to now, they've like 4x the amount of members they have, whereas Lending Club doesn't see that type of growth in its user base. And so now that SoFi's user base is 4x larger, it probably means they get roughly about 4x as many applications for their loans, right? Because if you're already with SoFi and you're looking for a personal loan, maybe not 4x, but directionally, the point is the more users you have, the more of those people are going to apply for loans. And so, and as you grow that user base bigger and bigger, right, it makes sense for third parties who are looking for assets and looking for personal loans to go to SoFi, because SoFi can originate those. They have a big enough member base where they can grow their originations in order to hit that demand. And it's a much lower customer acquisition cost for SoFi to do that than for Lending Club, because Lending Club doesn't already have you in their ecosystem. And so again, directionally, I think it's a huge deal because of what it shows about the demand. And then eventually, as rates come down, banks should also get back into this, because currently the banks haven't gone back in for these types of assets yet, because they're still cleaning up their balance sheet, right, in a lot of cases. And as rates come down and as banks get higher liquidity, it should only be an even bigger tailwind moving forward.
Roy, do you think that deals like this with Fortress are going to be reoccurring in nature, or do you think that they're going to need to continuously find new asset managers to sort of secure these types of deals?
Chris is 100% right. Those deals, like, you don't need a deal to get some of those done, but I think you'll see them. There's just, as far as macro, going to be a high appetite for loans and lending products as rates continue to fall and as macro continues to look good. So I have no doubt that they'll continue. And SoFi won't be the only beneficiary. I'm sure Lending Club will be fine. Chris mentioned, and I think you even have a position in Lending Club, Chris, a small one.
Yeah, I've got a debit call spreads on them.
But that call by KPW of the pair trade of shorting SoFi and longing Lending Club, that's not going to age well at all. And I will use X as a weapon to continue to say, hey, look how bad. I was tempted to do it even like from this past week, but I believe it started October 10th. It's already not looking good. Now, I do think there's a chance, things might be choppy over the next little bit, but over the course of a year, it's difficult to see Lending Club outperform SoFi in this kind of environment.
Matt, what do you think? What do you think the stock is going to do for SoFi as potentially Q3 comes out and we see 4 quarters of profitability? I know that some people don't think that this will be a big deal. Others potentially are on a very bullish side of this. But do you think Wall Street is already pricing that in, or do you think that they need to see it in market screeners and these sort of things before they really start to price it in for SoFi?
I don't necessarily know if it's priced in. I can't comment on that. But what I will say is from other stocks that I've seen in the past that enter this sort of territory, it provides almost a floor. So I'm not saying 10's the floor, but what I will say is that there's likelihood that the volatility to the downside is likely to be somewhat reduced, just knowing that it's a more profitable organization. I think you'll have a lot more institutional buyers being available to buy into it, and that'll only be exacerbated as you get closer and closer to S&P 500 inclusion. And so to me, I think it's a good catalyst being 4 quarters under your belt. I mean, we've slowly seen it go from $6 to $7 to $8, and it's only, continued to increase the floor price for it as we've gotten more and more quarters under the belt. So I think that'll start to perk everyone's ears up. I think there's still a lot of people out there that have yet to really hear the fact that SoFi is a GAAP profitable organization, and it takes some time for people to really get that opportunity and recognize. And that year mark, I think, is probably where people are really starting to understand, because it's another piece that you could put on the belt of accomplishments and accolades for the company that I think people will then feel more comfortable investing, right? If you hit 4 quarters, then that means you have the accolade to be able to be included in the S&P 500. And so then it unlocks a whole another realm of folks that are able to buy. So while it may or may not be in the price already, that I can't really say. I haven't had as much price experience as you guys have, obviously, but just based off what I've seen in other companies, when they get to this point, I think it'll definitely provide a floor.
Can I talk about index inclusion real quick? Just to add something.
Sure. Yeah.
So for S&P 500, the most recent numbers that they came out with, like the April thing, you have to have like a market cap of like 18 billion to get into the S&P 500 now. It's moved up quite a bit. So SoFi, even if they are, GAAP profitable for 4 quarters, they're still not. They still won't qualify for the S&P 500. I think
S&P
unless they were
is more
but the S&P mid cap, I think it's 400. I think is the one is the mid cap one. That one, I actually think that they're pretty much a shoe-in for sometime in the next 6 months. And I actually think that like I've had other stocks that have gone, like Duolingo was added to that and jumped like 5% and like that 5 to 8% in after hours, and then has continued to go up from there. So I actually think that like I think S&P 500 is probably second half of 2025 might be the earliest that happens, would be my guess, right? Because it just takes a while to kind of get on the radar and get big enough. I would guess 2026 is more realistic, right? This is me trying to be conservative and realistic at the same time, but I do think inclusion in the S&P mid-cap 400 is really, really reasonable and probably going to happen in the next 6 months after October. And again, kind of like Matt said, that means that there's lots of funds that will see that and will try to get ahead of it, sort of like what's happened with Palantir. There was a lot of growth in Palantir before they even got into S&P 500, and then once they got into S&P 500, it's jumped even further, right? And so as far as the index inclusion goes, I think it will be a tailwind just over time as you get to those levels.
And let me add to that too. Like statistically, over time, usually S&P 500 inclusion does not much of an outperformer for stocks these days. There's been a lot of very well-known studies that have been published over the last decade that have shown that. That's not true for the smaller indexes such as S&P 400, and so that tends to be a little bit more violent, volatile. It's not like the bull thesis. It's not why I'm investing in SoFi at all. It's just a nice little bump on the road. But it's especially so, though, for any that are heavily weighted towards retail. So we saw that with Palantir, certainly, and that's part of the surge. It's not the only reason for the surge. And I think that we'll see that for SoFi when it comes. Now, S&P 500, I have to say, Chris, based on a lot of the names that are hitting profitability, that are growing rapidly, that are already that size of the market cap, that'll be technically eligible next quarter or the quarter after. There's about maybe 15 companies that are really fine names. One of them is Robinhood, by the way, that are probably ahead of SoFi. So it may be, just depending on how many names that they do have rotating in and out, I would say probably more likely 2026. But you're right. Like they're
Yeah,
technical.
that's what I said. I think that's realistic. I think 2026 is much more realistic.
I have a question as the ignorant guy in the room. I'm confused. You said 18 billion was kind of the floor for an S&P 500 inclusion, but the bottom tier companies are around 8 to 10 billion. So can you elaborate a little bit more on that? Because I'm confused.
Yeah, so to be included, you have to hit that minimum standard. But if you're already there, they won't necessarily kick you out if you drop underneath.
Grandfathered.
Yeah.
What was interesting, and the reason why I asked you that, Matt, is because whenever we were, I'm not trying to bring it back to Robinhood at all, it's just whenever we were at the Hood Summit, we met the Seawolf Capital guys, Porter Collins and Vincent Daniel. They've been very outspoken or critical about SoFi, shorting it at times. They're currently not shorting it, according to what they said at the event. But they had two main concerns that they really expressed. One was an accounting issue. They don't like the way that SoFi does it. They think that it's actually fake accounting. And then two, they also said it's a very unprofitable business. So I still think that there's this holding or this mindset that SoFi still, although it's been 3 quarters and guiding for their most profitable quarter, this quarter coming up, at least from an EPS perspective, it doesn't translate unless people start to actually see it on an annualized basis. So
I think a lot of that stuff is psychological, though, Tanner, because if you look at it, you have institutions, you have indices, you have analysts, and then you have retail, and so much of it are dictated by each other because the analysts have low price targets, because institutions are not adding, stock's been depressed, and now you're seeing institutions being the net buyers and retail being net sellers at this range, and that's going to form a higher base. I think that with the earnings and as people can be able to model out this fortress deal in terms of what's going to go to the bottom line, as management is able to provide more insights through guidance, like you're going to see a composition shift in who the buyers are. And then that's going to dictate that ecosystem even further, where analysts are going to increase price targets as a result. And it's going to become a virtuous cycle, because up until now, it's been sort of a vicious cycle where you have high short interest, and then the analysts on top of that are issuing $4 price targets and so on and so forth. I think it's going to be the reverse on the way up, right? You're going to have analysts upgrading based on the guidance, based on the financials, and then you're going to have institutions adding, and then that short interest is going to be falling. And this is why it's also significant every end of the week for us to finish above those key levels, above $10, above, $10.50, $9.50, whatever, because it's going to help us from a short perspective. And as that short interest comes down, as those analysts raise their price targets, and as institutions buy more, then it doesn't really matter to a large extent what retail does. But I think that retail is going to start to FOMO in because they're the most sort of mercurial when it comes to the short term. That's the thing that's going to form that base. And it all starts, I think, with that earnings, because people who are bearish are trying to find things to cling to make this thing go down, or to make a justifiable case that sounds smart. And I think very soon there's literally nothing else. Like, what are they going to say? Delinquencies or defaults or all this stuff, like none of it really applies anymore. And the bear cases have changed quite a bit over the last year. And I think that once those bear cases start to run out to a large degree, like the feasible bear cases that, any one of us could sit on this panel and be like, yeah, I could see that happening. It's a risk for sure. Like, once those get deconstructed after Q3 earnings, then I think that a lot of the people who are negative are going to turn positive, and that vicious cycle is going to turn into a virtuous cycle.
And one of the things I want to add directly onto that, Tevis, is you're coming against last year quarter where it was negative 29 cents. And that's huge drag when it comes to looking at the TTM, because the last several quarters have only been, less than 10 cents. And so when you think about it, when you look at it on a TTM basis, you still have this large drag of 29 cents. Even if you come out with even something of a couple cents, that's going to completely knock that out. and you're now going to be looking at a positive TTM for net income over the past several quarters, and I think that's potentially going to turn over a new leaf. People can't look back and say, oh, they're negative EPS anymore, because a lot of the things they look at trailing 12-month, they look at maybe forward 12-month, and so then we'll not really have anybody have the ability to give an excuse for that to be the problem anymore, because you've now gotten that negative 29 cent or whatever it was, 26 cent quarter out of the past 12 months. So fingers crossed that helps.
Yeah, the TTM number is going to take a huge jump, right? Like it's going to look really, really positive.
300 million change or something like this to the positive side.
Like that.
Yeah. Roy, anything to add on that?
Well, I put a comment there in the private chat. I don't know if you want to go into that bear case or not, but there's other ones out there.
Oh, yes. So one thing that I did help extinguish from the Seawolf Capital guys is that they pay creators to talk about the stock and everything like this. This is a case that they definitely said, and I said, here's my phone. You can go through my conversations with any amount of Sofi or Anthony Noto. They don't even talk to me. Like, let alone pay us or do anything like this. And I think that part he kind of gave up pretty quick. I don't think that that they wanted to, that wasn't the hill that they were going to die on for sure.
Sorry, I'm confused. They were alluding to that Noto pays you?
That SoFi was paying us as content.
Data-driven investing.
I wish.
Yeah, I know.
I know, me too, right?
Yes, please.
I'll give him my address,
Dude
but
doesn't even respond to my DMs, let alone payment.
Yeah, I can't even get text message responses from Tevis, let alone Anthony Noto. So
they were completely shocked that and wondering why SoFi even has a large viewership versus other stocks that are also doing good things or even potentially better on a stock price perspective. And we just had a conversation about, like, if you're coming from Wells Fargo to SoFi, that can lead people to have quite an amazing experience and be big fans of the company and stock.
That's what happened to me, right? Like, I opened up an account and I was just like, oh my gosh, this is what banking should be. Like, this is just easy and there's no fees and I don't have to talk to stupid people. And then I was like, I should invest.
Yeah, no, and I think potentially out of the 500 or so people that are watching, like, I'm sure that a large percentage of people had that similar experience. Okay, what other news was there this week? There was Nova Credit, Fortress. So another big talk that I wanted to talk about, Chris, was valuation. Whenever talking about lending, and I saw some comments get a little bit confused that if SoFi is doing lending, that this should hold them to a certain PE ratio or something like this. Remember, SoFi originates to sell loans, so it can actually be very capital light. It just hasn't recently. But what do we think about these sort of Fortress deals and having a capital light business versus holding loans on the book and just making a ton of interest income?
So I could talk about this a lot, but I'll try to give you the Reader's Digest version of it.
Okay, you have 25 seconds. Go.
That's not going to work.
You're down to 22 seconds. Go.
Oh no. Here's the thing: is that, like, I guess my thing with the tangible book value. So a lot of people will say the reason that SoFi you should have a PE of 10 and should be valued on its tangible book value is because that's what you do with banks. And the reason that you do that with banks, Roy.
All right. Thank you so much for that, Chris. What do we think about? Go ahead.
Okay. The reason that you should do that, right, is if their future growth and their future earnings potential are limited by the size of their book value, then you absolutely should value them based on their tangible book value, right? Like, if that's the case, if the only way that SoFi can make money is by lending it out and getting net interest income, you should be able to easily calculate how much they can grow every single year. And my response to that is that has been wholly and completely untrue for the entire history of the company, right? So, like, if you go back, like, its 5-year CAGR is somewhere in the 45% range. So they've been CAGRing their revenue at a 45% clip for over 5 years. They've only been a bank since the beginning of 2022, right? So for 2 of those years. So the basic premise is the only reason you should be valuing it that way is if its growth is limited, and its growth isn't limited by that. And like the data make it completely and totally obvious. And so there's no reason to think that moving forward. Now, obviously it's hard to CAGR 45% year over year, and growth has slowed. But I don't think, and if I'm wrong about this, this will be the reason that I get this stock wrong. I don't think they will be limited to low teens growth, like a lot of analysts are saying. Like the average analyst estimate for their revenue growth for 2025 and 2026 is like in the mid to low teens. So like 12 to 15%. And if that comes true, it means that I will have been wrong about my thesis, because it does mean that growth is going to slow meaningfully. But I don't think that's the case because the amount of members that they're bringing in, because I do think that they can drive a lot of capital light revenue growth, both in lending and in financial services, and obviously through Galileo, which we haven't even touched on, right? Like they've got a whole host of revenue streams that are not capital intensive, meaning that they don't have to use their balance sheet in order to make it happen. And them, like the numbers that they've given for guidance for through 2026 also assume much higher than mid-teens growth rate. Like if you average it out, it's somewhere, if this year comes in at, call it like 16, 17% growth, which is what they've guided for, which I think they're going to beat that number. But if that were the case, they would have to get up to like the high 20s in both 2025. So like 28% growth in 2025 and 2026 in order for them to hit their guidance. And I just don't see how, again, so I understand where those people are coming from. I understand why they're saying you should, value it as a bank, and why that should give you this multiple on its tangible book value. I just think that their assumption is wrong. The inherent assumption is that growth will be limited by the book value, and I think that assumption's wrong, and it'll be proven one way or the next in 2025, or one way or the other in 2025. Either they get up back above, call it around 25% plus revenue growth, or they continue to slow down, and then it's 15% revenue growth or less. And if that's the case, then I will have been wrong about the stock.
So you're thinking it can reaccelerate back to 25 plus?
I think so. I mean, that's what they had built in. Like if you go back to their their long-term guidance, that's what it would have to accelerate to in order for them to hit what they said they would do in whatever it was, Q4.
What are you expecting as far as bottom line from the Fortress Capital deal for SoFi?
So I mean, you assume kind of a 5% gain on sale margin for those loans, give or take, right? And it's $2 billion worth of loans. So that's $100 million in revenue. The contribution profit from lending is usually somewhere around 60%, because they still have to pay for these, right? Like the customer acquisition cost for a loan is going to be higher because the payback's higher. And so call it contribution profit of 60%. You're probably talking about the bottom line increasing by, I don't know, 30%, 30 to 40 million dollars would be my guess. Again, these are just back of the envelope kind of calculations.
Yeah.
So in terms of the actual money that it adds, like the stock price jumped like, or the market cap of the company jumped like $1 billion the day that deal was announced.
You think it's
right?
going to bring in
like
$100 million and only
revenue?
40 million to the bottom line?
I think so.
Why?
Like those are kind of the, well, I mean, that's the basic, that's kind of the unit economics that they have, generally speaking, right? So again, 5% gain on sale on $2 billion, that's $100 million in revenue. The contribution margin from lending is around 60%. So you're talking about $60 million of contribution profit. And then you have to subtract out overhead and things that aren't specifically to the lending business, and you're left with, call it a 30 or 40% margin on that revenue overall. So for $30 to $40 million.
My understanding was their lending as a service is a higher margin than them originating loans themselves.
I mean, maybe you're right.
Yeah, I guess I just didn't anticipate that would bring up stock-based compensation or something like this. Like I assumed, bringing on more revenue would actually lower their stock-based compensation as a percentage of, like, so I actually think it would be at a higher margin than looking previously.
Yeah, the incremental margin probably is higher. You're probably right, but I don't expect it to be more than 50%. Or do you think it would be more than 50% in terms of like
Personally,
net
I do.
income margin?
Yeah, I mean, I'd need to look at it again. But yeah, I mean, I don't see what adjustments you would need to make from, like, I don't see it bringing up a stock-based compensation or anything along those lines. I think that this is going to be extremely just
Accretive.
accretive to their business. So I assumed a pretty high margin going all the way to the bottom.
And
I mean, they will still have to service those loans, right? Because the way they typically do this is the servicing strip is how they actually monetize it, right? And so they still do have cost to service and other things. But sorry, Roy, I cut you off.
The big question mark for me is, they have a lot higher number of members, people that already have a relationship with SoFi. So the cost of acquisition for those lending clients, depending on how well that flywheel is actually working, may be substantially lower. So if so, then higher margins. But we'll have to see.
So we have seen that, like in quarters where they have high originations, they have higher S&M spend, right? And that makes sense.
But even if it is, let's say, 40 million to the bottom line, it's on a single deal, and it's non-exclusive. Like, another institution can come to SoFi for the same deal, and so I think the 10% move in market cap partially is because, like, you can't really do a strong correlation in the short term because the stock will move off of, like, a random tweet that Anthony Noto might put out, and the stock might move up or down.
Or me.
So there's no real attribute. What's that?
Or me posting the chart.
Yeah. Okay. I mean, yeah, sure. So there's no real like attribution there, but I think that the real interesting thing with regards to this that I found is the fact that they can rinse and repeat this for many different institutions, and that this is really now something that analysts have to model in as a different revenue source for the company. And it sort of changes that narrative of like, well, you've had multiple evolutions in SoFi's trajectory, whereby, there was a point in time where they were like 90% lending, and now financial services is a bigger and bigger contributor, especially with that astronomical growth rate. And there's going to come a time where the tech platform is a significant contributor to the revenue mix as well. And so the more frequently you have these different revenue sources diversifying that mix, I think that's the piece there that is really cool to model out, because it's just something that you didn't really forecast for beforehand and can really change the valuation over the long term. So it's not necessarily the deal itself that I think is going to be like, wow, this is a game changer for SoFi. I think it's what the deal signifies for the direction that the business is going. I think that is the piece that, gets people's imagination going when they're modeling out multi-year trajectories.
Anything else before we move on to the next topic?
So on these kind of deals, I'm just kind of curious because I don't have a good read on this either. How long are you guys guessing that it'll take to fulfill that 2 billion allotment before they either look at expansion or they keep doing it just without the contract, or because I have no idea.
The previous one was for 2024, so it was 1 year. The previous $2 billion forward flow agreement that they signed in whatever it was, Q4.
Yeah, my assumption was just 12 months.
All right.
There is another piece that SoFi released this week that I thought was very interesting. However, there's some speculation as to what it even means. Now, I've changed my opinion on this, and in fact, Roy, I think I discredited you, and now I'm actually leaning more to what you think, as I had a conversation with someone that has been a great source for SoFi information. But SoFi Technologies to adopt Galileo's Cyberbank Core for new commercial payment services sponsor banking program. That's a mouthful. What the heck does this mean? Any ideas? I'll tell you guys.
Roy want to go ahead? You called out Roy.
I'll tell you guys the three main ideas of what people think it is, and then what I heard it actually was. The first one being that this is them working closer with Galileo and Technisys to potentially use the Technisys Cyberbank core to develop a business banking side. I heard another one, which is saying that they've created a better product so then they can use Cyberbank Core's platform, offering it to fintechs and everything like this, and have a sponsoring bank, like a better way to onboard fintechs to use SoFi Bank as a sponsoring, bank relationship partner, whatever. The third one, which is what Roy thought, is that this is simply Galileo integrating Cyberbank Core officially, which is what I heard is actually what they're announcing.
I get it right from time to time. That's nice.
Yeah. Chris, what was your thing? Because I know in the sort of circle that you talk within, that was actually not what people thought it was.
So I think there were lots of theories on this. I think that, and we don't really know for sure, but my understanding from having read this, and again, I only read it through once and like didn't do any digging because I was busy like seeing national parks and stuff. But I think that Roy's pretty much correct. I think that they're using Cyberbank Core for all of the business proceedings that happen through Galileo. So Galileo processes payments like ACH transfers, debit card transfers, and along with that, you need a core and a ledger, right, in order to keep track of everything that's going on. And I think that they are announcing essentially that they've moved all of Galileo's like accounting stuff that they do that requires core onto Cyberbank Core. Now, I do think that a lot of those transactions, so we're talking about business transactions, we're talking about a lot of these same things that you would need in order to offer a business banking relationship, right? So like to do it on their own through SoFi. So I think that it is a step in that direction, that they are working, and just in general, they've been working. A lot of the things that Galileo has come up with in the last year have been really SMB related. Whether it's a lending platform for SMB, or they've talked about BNPL for this, that now they're talking about, doing all of these transfers through the Cyberbank Core. I think that all of that, like when you listen, Noto has said in the past, the reason that we bought Galileo is first and foremost to be able to service SoFi. Right. And then everything else is kind of just gravy on top of that. But the main reason is so that we could own our own tech and own it vertically. And all of these steps that they're taking seem to be steps towards business banking. Now, I don't know when that's going to come out, right? Or if it's ever going to come out. I think it will. I would have liked for it to come out this year. Honestly, I think that it's probably low-hanging fruit. I think that they could monetize a lot of existing members by offering them business banking for SMBs, because a lot of these people have side hustles and are entrepreneurs and that sort of stuff. But I think that this specific press release is what Roy was talking about, which is just that they're using the core and the ledger from Technisys in order to offer all of Galileo's other systems. I don't know, Tevis, Tanner, do you have any other interpretation of it?
I mean, I just took it in a very, very broad brushstroke to just say, okay, vertical integration is fundamentally a good thing for the business, and it's the direction that we knew they wanted to go into. Either way, whichever one it ends up being, I mean, SoFi is not really super granular with the details that they provide in these press releases. It's like, hey, here's a paragraph, here's a quote, and then that's it. And we're left to pick up the pieces and apply some of our own, context from, oh, well, somebody said this on this fireside 8 months ago, and then we know that vertical integration is a direction that they want to go. We know that this was one of the reasons that they purchased the tech platform with the Technisys and Galileo acquisitions. And so this is just them executing on their playbook. And at that very super 50,000 foot view, it's great because it's going to lead to more efficiencies or cost savings, or it's going to lead to, just overall better ways of working.
There's one more element to this, just from the way that Anthony Noto retweeted it, the wording that he used within the article. it read like an advertisement. And that's exactly, what it is beyond, what we talked about is them saying, this is needed. It is vital. It is a very, very strong tailwind for that tech platform. And then it just lays out all this list of features. So it's both for shareholders, institutions, but I think it's mainly for future customers, just to realize, like, if you're thinking like, hey, we got a problem here because we don't have a modern banking core, you're absolutely right. And guess what? Look at all these features we have, because they did not need to write that news article that way. So it's basically free advertisement is what, but there's more to it than that, but that's a second piece there.
Along those lines, the other thing is that, like, with the Synapse collapse and everything else, right? Like, the fact that I think they're highlighting, hey, you can do your core, you can do your ledger. We have a sponsor bank, and we're doing all of this for SoFi. So you know that this is all above board, right? The fact that we're part of a regulated bank holding company means that clients who are looking to, do some sort of payment processing or do a core or something can trust that Galileo's technology is going to be able to service them, because they service SoFi, which is a fully regulated, nationally chartered bank.
I just read this article that came out. Well, actually, before I get into that, the only reason why I thought that it was confusing is because it was posted by SoFi. Like, if Galileo posted that they're integrating these solutions and they posted it on their own, then I would be not confused at all. But it was just some of the wording regarding SoFi that made me think that it was more integrated with their actual SoFi bank features rather than just being on the tech platform and subsidiary side. But I was going to say, I just recently read this Forbes article that was talking about the Synapse collapse and how this is going to devastate the fintech market and the banking relationships. And one of the things that they highlighted in that article, just straight, like flat out, was that there are no banks in the United States that own their own core software. And it's interesting because now SoFi is that sort of break in that thesis. They are a fully digital bank. They get all the features of a fintech, and they own their own core and ledger, which is just phenomenal and super unique versus any of the not only the incumbent players but also the fintechs as well. So SoFi is very uniquely positioned, and everyone treats it as if it's just a bank. Lastly, Matt, in terms of SoFi's stock price, oh no, I just forgot what I was going to say about the stock price. Dang. Okay. What else do you guys have on it? Let me just think about what I was going to say. I had a good question for you, and then I just freaking forgot.
So one of those things that we can talk about, and there was some talk
short interest as well,
you guys during X, was whether or not SoFi should have an event like Robinhood had, whether that's like in the future, what they'll have in December, the Investor Day, or a summit like this where they show off a whole bunch of products. And if so, what would be the benefit of that? And also, do you think that it would ever happen?
So I actually want to ask you, Roy, and you, Tanner. It seems like one of the things that I think, so I floated that out on Twitter. I said, I think that SoFi should do those types of events. I think that it energizes the hardcore user base. It energizes the investor base, which, like it or not, is something that, again, you want to do, right? You want to get people excited about both the product, and you also want to get people excited to invest in the company. Those are things, there's nothing bad. Now, there's resources that you have to put into making that happen, right? But it also seems like, I mean, you guys met the people from Seawolf Capital. There were lots of people posting about having been there. There were lots of people in the finance industry. Like, it seems to me like the benefits from having something like that, from the intangible benefits, are actually greater than the resources that it would take to put in there. And then Tevis also had a tweet. I'll let him talk about his points that I thought was like just spot on.
We literally saw like Roy and I were sitting there chatting with Vlad, like in the middle of the hallway. Which, by the way, Vlad, for how much time that or how busy he was, gave us an unbelievable amount of time.
Yeah.
Hours. Like, it was a fantastic amount, time. But we saw the ARK Venture guys come up and pitch ARK Venture to Robinhood in front of our own eyes. Like, there are deals that are being made at these conferences, you know? So I don't know. It's very interesting. I would hope that Galileo would be a absolute fit for these types of summits. Bring all the fintechs together, industry experts. You have all of those. I would have assumed this from Galileo way before I assumed it from Robinhood. And yet the Robinhood summit, from everything I heard, was a smashing success. And I sure, like, it was a highlight of my life, man. It was so much fun. So
yeah, I got kids and a wife, so I can't say highlight of my life, but it was one of a very probably top 10 moment for sure. Beyond what Tanner said, and I think you're absolutely right on that, is from the company perspective, it costs some money to put on these kind of events. There were a lot of like deals and sponsorships, like CBOE was one of those that they're doing the index options, which, you know, they had a big thing there as well, a couple of booths and events and different things, and even sponsored one of the parties. But from the organization itself for Robinhood, what I heard time and time again was this gave them a greater sense of urgency, which I think they already had. And frankly, I don't know that SoFi has that. I'll just say, because I could guess, but I don't know for sure, because it kind of set a timeline for this is, and it's not like an Elon Musk timeline where it just like seems like it's ridiculously soon and you better get there, and it's pretty much impossible unless you're Elon Musk. But it pushed things forward that perhaps might not have gotten developed until maybe next year. And then they're not very siloed at all. So they were able to like even communicate and hold back certain projects that they're like, hey, this would be too much too soon. And then it, you know, brought like they have several different offices as well. And so they have a lot of people that have seen each other because they work remotely, not all of them, but some of them. But they've never met each other in person. So they had that level of connection as well. I think that was really good and healthy for Robinhood. They had like a get together, it seems like, with a lot of them too, the day, maybe a couple of days before the event. I'm not really sure on that one. And there was one other piece that I was going to, and just like the excitement level. So the, with very rare exceptions, almost every single Robinhood employee, they were like a kid in kindergarten doing show and tell. Like they were really excited to show everybody what they had been working on. And they were like talking about how hard it was for them to like hold back and not tell anybody all this information because they wanted to show it off. And it just like they exuded excitement and passion. Vlad even mentioned it, like with having to ban one of the products uses during meetings because people were like wanting to use it, play with it, tweak it, edit it. It kind of, there was actually even some Palantir elements, Matt, that people would go home and then would keep working because they were so excited and passionate about what they were doing. And so I don't know that, it may not be quite as beneficial for SoFi, but like you would certainly get some of those elements. And I would love to see that.
One of the things whenever we were there, Chris, which I really tried to find out, I asked everyone if Galileo was also servicing the Robinhood credit card. I got nothing from that. So not sure. Matt, I remember my question, by the way. I remembered it instantly. SoFi stock. One of the conversations at the Robinhood Summit was whether we're trading these types of positions around elections and what or how elections sort of play into playing an interest rate sensitive or even, bank lending, more regulation type positions like SoFi. Any thoughts on this?
I mean, I know some people do definitely plan on potentially buying into banks around decreasing interest rate environments because they think they can get a leg up, and when people begin to either refinance or do some of those other things as well. And it's historically, at least in the recent past that I've seen, back in 2018 timeframe, I took advantage of the same, specifically for banks. I think at the time for me it was Wells Fargo, and I found profit around doing that. In terms of election times, I've never really looked much about investing in particular sectors during election times. Although I know that there's influences. I know some folks are really looking at infrastructure stuff around the Biden, the Biden administration was potentially going to be. So they bought a lot of Caterpillar, they bought a lot of other things, and folks that have done that, obviously, over the past 3 to 4 years have done extremely well. I know I had some Caterpillar. That's not why I bought into it, but the Inflation Reduction Act actually helped propel that stock to new heights. And to be completely blunt, I sold way too early. But I don't know, for things like SoFi, to me, it's more around, I mean, there could be little nuances. For me, I'm looking for, a lot of my positions aren't necessarily swing trades anymore. They're more so about long-term 5-10 year potential holds. So that lasts over multiple election cycles or multiple business cycles in that respect. So I might be the wrong person to ask this question, because I'm holding things through multiple cycles. Like Palantir, for example, this will be the second cycle I hold that through for a presidential election. This will be the first one for SoFi. And so anyway, I might be the wrong person to ask.
No problem. No problem. Any last remarks from the panel before we wrap up and head to the after hours?
Do we want to do that, the SoFi event thing?
SoFi event?
Do we want to, the thing that Roy posted in the chat?
I'd love to hear, Tevis, Chris, if you have an opinion also to share. And I know that actually you do, and Matt as well, if you have an opinion on that, whether if there's anything else that SoFi might benefit from, if they should have one, and do you think that they will? I think that they won't.
Well, yeah. I mean, I think for the two of you who were at the Robinhood event, I'd also be interested in hearing, like, could you see SoFi doing something like this, or what would that look like? Because, I mean, look, there is this perception that, and I saw it, some people were commenting on Chris's original post. So basically, Robinhood had their event. Tanner and Roy went. Robinhood presented a whole bunch of interesting stuff that's on the roadmap, product announcements. They got to witness firsthand the culture of that company and how they build products, how they think about the customer. And then Chris posted on X saying, hey, I'd love to see SoFi do something like this. And then I just added some thoughts around, like, this event would make so much sense because SoFi is seen by so many people, both retail and institutional analysts alike, as just a bank. And, they were thinking about, what would SoFi possibly talk about at these events? But if you're really building this company that's going to be a hyperscaler to that degree, that's going to be a company that changes the paradigm on their industry, that modernizes it, then I think that we, not only us as a retail investor class, but like as a whole, people need to start rethinking SoFi. And that's very difficult to do through a screen, through these press releases, and through just bite-sized sound bites that we get on random Goldman Sachs interviews. If management is always going to interact with the institutional analysts, if they're always going to interact with the Bloombergs of the world, then that's only one lens. But the events themselves allow people to witness firsthand what that culture is like, allow people to witness firsthand what the product announcements are going to be. It's a platform for showcasing new features on the roadmap. And it adds more transparency because you get to go to a granular level of, hey, this is exactly how we're going to achieve that vision, right? We want to be a company that democratizes finance or gets money right or whatnot. Here's the products that are going to do that, and here's exactly how they play into that vision. You can't really do that through a PR. You can have some fancy one-liner and a quote, but it's not going to ring true for a lot of people. It creates accountability for the company, right? Like if they announce something on stage, like Robinhood just announced with the Legend platform, for example, if they don't release that, then people are going to say, wait a minute, or if they release it late, they're going to be held accountable by their shareholder base. Whereas if SoFi says, oh yeah, level 1 options are coming, and they say it super in passing on an earnings call somewhere, then it's much easier for them to say, oh, our roadmap changed, and here's this other thing. So I think there's a level of transparency and there's a level of accountability in there. And then there's a level of engagement, right? You get to engage this investor community. You have an entire push through PR and comms, because for many companies, and somebody commented this on my post too, saying like, thanks, but SoFi has only a couple of hours to spend in the day. Would you expect them to expand their product or to like sell the marketing? And like the fact of the matter is that they need to do both. They're a publicly traded company. And just as they have marketing for users, they have PR and comms for the investor class. And at the end of the day, that market cap is unlocking so many things for them. And if people truly believe in their mission and their vision, they're going to be buying the stock and holding the stock for long term and supporting the company on that level. And so I think that having direct engagement with the investor community, not only us as retail, but I mean like analysts as well. If an analyst is able to sit down there and see all of the moving parts in detail about how these products are going to be released, if they get beta access to try them early, like, I don't know, maybe I'm naive, but I do think that it has a potential to accelerate that perception shift in people seeing SoFi as a more dynamic company. And then it also allows the company itself to get direct engagement with the investor community. Like, we had Matt Flo on the show a couple of weeks ago, and he was saying that he was a power user and SoFi reached out to him, and now they're bouncing ideas off of him for what new products that they should try, or how, he's basically like a beta user for the app, right? And so it allows a direct level of engagement to receive more feedback. It also, I think, is just a great networking opportunity, right? Like, their core demographic is more affluent people, higher income people. If they have an event of that sort, filled with announcements, filled with networking, filled with PR and comms, like, it ticks so many different boxes. I'm just shocked that they haven't done it yet, because a lot of the best companies in the world have investor days. PayPal has an investor day. Tesla has multiple investor days for different things. New, I'm sure, has an investor day. So many companies have it. Will they do it? I don't think they will, because it's not really in their.
So let me add some context. Let me add some context really quick. Back in 2019, they used to run member meetup events, which were a little different, but I remember Riley used to harp on that all the time. Whenever we went to the Hood Summit, it wasn't just, here's Robinhood's products. They know a lot of people are traders, and so they brought on industry experts to just say, hey, this is what the market's doing. Here's a panel on AI. Here's here's a section for you to come over and just rip us apart about what you don't like about our products. And people were saying, hey, Robinhood needs to add this, this, and this, and being very outspoken. I think SoFi would absolutely benefit that, especially if you're talking about something like having the slogan, get your money right, having, tax advice, having different investment experts on, or different industry experts, and also talking about new products, how they're wanting to advance that. And you have every single category or every single product line, Galileo, everything. It would be a slamming success. I'm surprised that Robinhood pulled it off as well as they did. SoFi, I think it would honestly be much easier for them to do it than Robinhood, being as specialized as they are on just brokerage. But should we wrap there? We're a little over time.
Matt, do you have anything to add as a newer SoFi holder, but you know the impact of some of these conferences, like Palantir, for example, has had a number of them, a couple of different types. Do you think it would be a benefit for SoFi? And
I think so. I do, because I think there's some products out there, like for people myself, that are different than traditional banking, and having that ability to ask and get deeper knowledge about how, some people have been able to utilize these things, or and I'm sure that there's a lot of opportunity on the websites that explain a lot of these products. But for somebody that is completely, I guess, a complete beginner to everything that they offer and has yet to do the due diligence, like a lot of these folks that are in the chat, as well as, you four as well, it's tough, because it is trying to revolutionize some of these areas that have been stagnant for quite some time, and really kickstart, what fintech should be for. But I know some people, just consider it a normal bank, and if they want to differentiate themselves, especially from like a valuation perspective, they need to get people that understanding that, no, this is a fintech company. There should be a premium associated with it rather than just potentially being a bank, right? And because you're going to get completely different multiples depending on what actually comes through and what people perceive you as. And so I feel like over the past few years, it's drifted more towards the traditional bank multiple and will continue to be viewed sluggishly. And if they do something like that, whether it's super helpful or maybe do more of these fireside chats, which I know they've put out in the past, and I know you guys have streamed, then maybe it'll get people to truly understand and unlock that fintech value that people are really hoping to see out of the stock.
Look how much Hood stock is just going up based on them saying that they're announcing more events. Like, it's just more transparency. It really does help the investor community understand what the stock should even be worth, good or bad, right? If SoFi should not be valued this high, I also want to know that as well, because that could be a risk for my investments.
Yeah,
but
just think about the sheer amount of content, the number of hours people have been debating back and forth and talking about all of these events. Like, look at Tesla, for example, right? On this podcast, we've talked about I can count several hours that we individually have talked about just that event alone. And it's good publicity, man. It's good publicity. And like, they hyper focus on marketing for the users, which I get. But at the same time, they're turning down users left and right to maintain, their high standards of quality. I just think that for them to do like 1/10 of the effort that they're doing on the user side for the investor side, I think would benefit. Like, it would be positive ROI of their time and money spent.
Let me ask, because I haven't contributed much, so let me contribute a little bit. Roy, curious in your thoughts, because on that same lens of saying like how Palantir does the AIP cons, do you think the interaction that you've seen, let's say Rocket Lab, that the executives have had, and as well as with like Palantir, where the executives have started to reach more out to the retail community, do you think that would help SoFi in a different lens as well, or is it completely different and might actually be a hindrance? People might view that as potentially interference in trying to pump the stock in an inappropriate manner.
Galileo should do an AIP type con, just because that's been amazing. Boot camps for Galileo.
Yeah, honestly, Galileo should, and it would also maybe help convince some folks that they are more than just a bank. It's stupid that they think that, but I understand that's where most of the revenue does come from. But no, I like, the one thing that does hold them back, I think, is a big charter, and they have a little bit of extra regulatory scrutiny that they may be worried about. But Galileo could do it. I mean, they are owned by SoFi, but I think that would probably be fine at the very least. But no, we've seen the benefit for Palantir. And really, I don't know if it's Elon Musk that kind of broke the ice with his interaction on retail, but it tends to help stocks, and I think companies as well, not just the stock itself, when they have a large retail audience. And SoFi, for whatever reason, it's certainly not because they're paying us. Although, yes, sponsor us. That would be amazing.
Be great.
But yeah, no complaints. Let me buy more SoFi stock, but or put it in my SoFi bank account. I like the company. I really do. But I think it would be a net good thing. Like, just having that level of interaction. The market, even among retail, does not like uncertainty. And so Galileo very much, although they're doing a little bit better with it, they're getting Derek White a little out there more product releases, more announcements. It's kind of a black box. They get not so much Galileo, but that pipeline that they have all these big banks coming in. And I understand, some of the reasons on that why, but they're just not as they're SoFi's more like just a typical bank, which would never ever deign to touch retail. Versus, you've seen it with Robinhood, you see it with Palantir, you see it with Tesla, and those companies are doing really good things. They have large retail followings for a reason. So, and I would say at this point, SoFi is very much a stock that retail loves. Probably will love it more as the stock price runs up. And rather than run away from it, just say, that's part of our culture. That's part of our identity as a company. We can lean into that and still adhere to regulation and and be careful on that with as far as that regulatory scrutiny. I think it'd be a benefit though, for sure. And I would appreciate it as a shareholder. At the very least, Anthony Note, if you're listening, let Tanner and Tevis and Chris interview you. Or at least one of them, Tanner.
He's not listening, bro.
Yeah, I know.
Let's wrap there, okay? We're a little over time. Ladies and
Thank
gentlemen.
you guys for inviting me.
No, I'm happy you're here, but you're not done, okay? You make sure you're unmuted. Ladies and gentlemen.
After hours.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time, but
say in a lovely voice, like a
after hours.
Get your credit card out.
just say bye for now.
See you guys.